Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. We're now a week into the new financial year, so I wanted to get a few ideas about potential opportunities for investors across the next 12 months. We've asked one of our favourite market analysts for 5 stocks she's keeping an eye on. Remember, this is general information only. You should always seek professional advice before making any investment decisions. Grady Wulff is a market analyst at trading platform Bell Direct, part of the ASX-listed Bell Financial Group. Grady, welcome back to Fear and Greed.
Thanks for having me again, Sean. I love coming on the show.
Oh, thank you very much. You have picked 5 crackers, some of which I know very little about, starting with the very first one, which perhaps I should know. It's a $1.5 billion company nowadays, Clarity Pharmaceuticals. What do you like about that one?
So the ticker code CU6, it's one of the new ones on the radar this year. And we know the healthcare sector outperforms the market over a 10-year period, but it has been sold off over the last year. And Clarity is one of the names rising to the top of this sector. And it's purely because of its radiopharmaceuticals in the cancer space. So they've got this radiopharmaceutical biomarkers that link to the cancer in the prostate for obviously males. And they've obviously got a treatment out as well. So not only the imaging, but they've also got a treatment out. So been on a massive run this year, but we do have a spec buy rating on them. Speculative just because they're yet to make some money, but their clinical trials are showing really positive signs. In this cancer space, you've obviously got Telix Pharmaceuticals is another one, but they completely are different. So I spoke to the managing director recently, Dr. Alan Taylor, and he said, we're very different to Telix. We work in the radiopharmaceuticals. So their most recent results came out with the Secure trial, and it's in phase 3 right now. And what that's shown is that their patient that has been undergone with their treatment, the drug that they're testing, is actually been cancer-free for 6 months. And that is just incredible. So with that in mind, there's not many cancer treatments out there. And obviously, chemotherapy is very aggressive and kills healthy cells as well. So for someone like Clarity Pharmaceuticals coming out with this trial and these results, it is astronomical. It's phenomenal. And so we're excited about the progress for them and what the future look like, because obviously with therapy drugs, they make a lot more revenue than the imaging agents do. So with that in mind, we can look forward to a potentially massive revenue runway should they go through the submission process in the near future. So we've got some more undergoing trials for them with the double dosage of 8, it's GBQ, but I don't know the actual word. I know the word, but I just can't say it. Dosage, it's healthcare dosage of their drug, but the results so far are looking phenomenal and really good at a market runway to commercialization. They've also got 7 other clinical trials in progress, so that's a really, really good sign, because often you get a healthcare company with 1 clinical trial and 1 drug they're testing, which is heavily reliant on this drug making it to market. But with Clarity Pharmaceuticals, they have 7 different ones. So that's a really huge revenue and global addressable market for them.
Okay, so that's speculative buy on that. I suppose it's important to mention the risks in this too, because they are clinical trials.
Yes.
And they're extremely rigorous. And so, you know, most clinical trials, I dare say, don't come to fruition in terms of a drug that makes it to market. Is that fair?
Yes, a lot don't. A lot definitely don't, because they can have as many good clinical trials as you can, but one negative one can definitely deter the FDA or TGA from approving it ever. So Clarity Pharmaceuticals are really making waves in their way to submission to commercialization, but the speculative risk is to do with they don't have approval yet. So they're looking really good, but there's a risk involved.
Okay, you mentioned in that discussion Telix Pharmaceuticals. You like that one as well?
We do. We have a buy rating on Telix Pharmaceuticals. This is one I've talked about for a little while now, and it continues to go from strength to strength. Again, this plays in the field of not just relying on one drug or treatment. So Telix is known for their Illuccix drug or Illuccix imaging agent that binds to, I think it's injected in the arm, and it binds to the cancer cells and shows exactly on a scan exactly which cells are cancerous. That starts in the prostate. The first drugs and the imaging agents are for the prostate. They're working on kidney ones as well, and also brain cancer, imaging agent, and therapies. So with Telix, they've already got commercialization, so that's a huge tick in the healthcare space. They've got a massive revenue runway and global addressable market, and so Illuccix is funding money, so they're not going to rely on shareholders' money anymore. They've got money coming in so they can fund their clinical trials for other drugs, and their outlook is really strong for their new drug, which is the therapy treatment of prostate cancer. So obviously Illuccix is the imaging agent, treatment, then you partner that with the therapy drug, and then it's a massive global addressable market. It's a really strategic move because when you get the imaging agent approved, all of these doctors out there start using it, and then they trust the Telix brand. So when they do launch the therapy product and agent, they're already not familiar with the brand and they can start using it straight away. So distribution won't be a problem for Telix. And so it's a really, really exciting time on the horizon for them. And when the therapy drug makes a massive, massive amount of profits and revenues compared to the imaging agent. So I think it's about $2,500 per patient per dose US dollars for imaging agents versus $250,000 for the therapy drug dose. So
wow.
It's an incredible amount of money, but the valuation is certainly worth it for Telix Pharmaceuticals.
Stay with me, Grady. We'll be back in a minute. I'm speaking to Grady Wulff, market analyst at Bell Direct. Okay, let's change tack here. Mineral Resources, mining services company. It hasn't had a good run in recent months. It's come off a lot. Perhaps that's why it's a buy, according to you guys.
Yeah, MinRes is one that's been on our radar for a while. I actually own some MinRes shares myself. I'm not talking about it because I own it. I bought it after doing a lot of research into the company. And I really love how Chris Ellison manages this company because in a mining space, you generally just have an asset or a few mines and you start producing and you sell the offtake and all of your commodity that you're mining for. But that he's actually partnered it with the mining services division as well, which is obviously with having a commodity or a mine, you've got to ride the fluctuations of the commodity prices. So generally, like lithium we've seen recently is sold off completely. And so companies in that sector are really heavily hurt by share price, by sales, everything goes down. But with MinRes, they're not tied to commodity prices. They have lithium, they have iron ore, which is great. But they also have this services division, which ensures they have a consistent revenue underlying and underpinning their earnings and profits and their operations every day. So they do have those contracts and that makes sure they're continuing through all of the tough times in the commodity cycles. With the outlook for iron ore being quite strong still, we've seen a rally recently. We've still got strength in the horizon. Obviously, they've got their Onslow project and that's just come online recently with the first production coming out. That was ahead of time and schedule and on budget, which is phenomenal for a mining company because you quite often hear, costs are blown out, CapEx is high, OpEx is high. But nope, Chris Ellison has managed to do a fantastic job there. They've also in their third quarter, we've seen an increase in lithium spodumene prices, which I know is a wow factor because lithium has been so heavily sold off because of reduced demand. But looking forward, the demand is looking up and we're looking for a rebound in lithium. And that's exactly where that's going to play in for a company like MinRes with their assets out there. So they've got a few different assets. They've got the mining services. They're looking really good heading into FY25.
Okay, let's get on to a couple that I really know nothing about. One you've got to buy on is Rural Funds Group.
This one's a really interesting one. Now, the REIT sector is the sector that a lot of investors got wrong in recent times. Obviously, you associate REIT with properties, with obviously property management, but then you've got a lot of investors thought it was simply retail and office spaces with the work from home policy, meaning a lot of office vacancies. Investors thought there was it wasn't a good idea to buy into the REIT sector, but there's really good hidden gems within the REIT sector, and Rural Funds Group is one of those. Now, they own acreage around Australia in the farmland area, in lots of different farmland areas, and they have different tenants that are listed like Treasury Wine Estates, Olim, AACo, and Select Harvest, for example. So obviously, they're working with these different ag stocks. So what happens is they own the land and they lease it out to these companies. Now, when you're looking at a REIT stock, you want to look at the weighted average lease expiry, so their lease tenancies and their terms and the average across their portfolio. And a company is normally around in the REIT sectors around 2 to 5 years, but theirs is 13.9 years. So what that says is that they've got annual recurring revenue locked in for between just below and just above 13.9 years across all of their portfolio, which is really good because in the agricultural space, as we all know, you can be the best farmer in the world, but Mother Nature plays a part. And so an unfavorable crop season can lead to seriously bad revenues and bad earnings for a company company in the ag sector. But Rural Funds has overcome this because they've locked in their tenants for so long. But also a lot of the contracts and the rental contracts, they're tied to inflation. And we know inflation's been quite high and CPI has been high in Australia and sticky as well. So every increment up has seen a tick up in the prices that these tenants pay. So that's increased revenue for literally using the land that Rural Funds Group owns and operates. So it's a really good thing. And they also own their own land and they're developing their own macadamia farm. Now, I'm not sure about you, but
I love the macadamia. Yep.
I love them, but they're so expensive.
Yeah.
So the margins are so high on this and they're really capitalizing on this market. So with a favorable outlook for the winter crop coming forward, it really puts their whole portfolio and this macadamia portfolio in a really good position because we had the ABARES report out recently. The winter crop's looking really good. La Nina and El Nino events are looking subdued. So that really puts all of our ag stocks in a really good front heading into FY25.
Okay, and the last one, just quickly, Propel Funeral Partners. Is that a play on demographics?
It is, unfortunately, and with these companies, it's really sad to say, but a rising, an aging population and higher death rate in Australia leads to more money for a company like Propel Funeral Partners, which is a sad fact, but we all need a good funeral out there. And the price of funerals has been going through the roof. And this company is Australia's, it's among the most, I think it's the second largest in Australia, across Australia for crematorium, for funerals, pet funerals even. Apparently people have pet funerals now because we love our fur babies out there. But no, so Propel Funeral Partners, they've been on a really strong M&A activity recently, so acquisitions across Australia to bolster their portfolio and really support this growing need for funerals around Australia. They've also increased prices, so again, margins are going up, which is a very good thing in this environment. And we continue to see that over the next few years, they're going to continue this M&A strategy, and that will really put them as one of the leading providers in Australia. We also see them as quite defensive in the market right now because no matter any economic cycle, everyone does need a funeral who passes away.
Indeed. Grady, thank you for talking to Fear and Greed.
Thanks for having me.
That was Bell Direct market analyst Grady Wulff. This is the Fear and Greed business interview. Remember, this is general information only, and you should always seek professional advice before making investment decisions. Join us every morning for the full episode of Fear and Greed, Australia's best business podcast. I'm Sean Aylmer. Enjoy your day.